week 14, and this week has been a crazy week. We have, I think, more than 10 trading opportunities this week. It's the most I've ever had. I remember on Wednesday particularly, we had around 8 trading opportunities where the account just went down 7% net and then it went back up to 8%. So there was just tremendous amount of volatility in the market, especially from Wednesday to Thursday. These 2 days have been filled with a lot of different trading opportunities. So we're going to jump into the video to find out what these opportunities were. At the same time, unemployment claims have been going up tremendously. I think we're hitting around 23 million unemployment claims here just in the United States. Globally, it's even worse. There's even headlines saying that in Australia, 1 in 5 people will not have a job by the end of the next 3 months. So it's just a lot of confusion right now. We also have to understand that the stock market is a 3 to 6 month leading indicator to what is happening in the real economy, right? So 3 months ago, the stock market took a tank with 3 consecutive waves, 20%, 15%, and 10% on the S&P 500, and it's a total of around 45% drop from its high. So it was really significant. Now, the S&P 500 and the global economy is just a leading indicator to what's happening in the real economy, in real businesses that you see around you in the city, like, you know, your brick and mortar retail shops, your service shops, your massage parlors. All these are the real economy, right? What we consider real economy. So when the stock market crashed, a lot of people thought that, oh, the economy is going bad, but companies still have cash reserves in order to sustain their operations. But after a while, when the situation really hits, and when there are increasingly exponential numbers of corona cases already in the world, we are looking at an unprecedented time where lots of retail stores are getting shut down. You know, lots of brick and mortar stores are collapsing, and so this is just the beginning for these the real economy that you see around you. There'll be a lot of small businesses, especially SMEs, small medium enterprises, that would in fact be collapsing or having to file bankruptcy. So this is an unprecedented time that we're doing this, and especially this trading journey that we're doing now. You know, if I did it 2 years ago, it would have been a normal uptrend market. But right now, I got at a time where the market is going crazy. This is both a positive and a negative. A positive in the sense that I get to prove to myself that the strategy works even in times of downward market spiral. Bad times is that there's just too much volatility, too much new things to take into consideration to develop the strategy, especially developing situational plans for this, because my strategy never really included anything that was, you know, that it never really incorporated any elements to what's happening to the society right now. And so it was a good thing that I could develop and modify the strategy in a way that fits to the current economic climate. So without further ado, and without me further blabbering on, you know, all these different terminologies as well as statistics, let's jump straight into the video. Alright guys, so welcome to the monitor. What we have right here are the trades that we took last week. In total, there are 12 trading opportunities, and you can see that it's just in the span of 1, 2, 3, 4 days. So in 4 days, we had 12 trading opportunities. This gives us around 3 opportunities per day. And so because there's so many opportunities this last week, we're going to expect fewer action this week, which would give us a little break from all this hectic movement. And if you can see, out of all of these trades, how many were on the 15th of April? 7 of them were on the 15th of April. And if we look over here, we had a significant change in accounts throughout this time. You see that Starting from last week, it was $6,930. We went up to around 7,250 until we tanked all the way down to $6,700 before picking our way back up to break even at $7,000, and then back to, all-time highs, $7,500. And so this time, right. So we're gonna go straight into the recap. We're gonna talk about firstly the US dollar, Japanese yen. So on the US dollar, Japanese yen, we had a entry at around 107.241. So if we go to 0.241, which was this level right here, if we scroll back to this time right here, yep, perfect. So it was this level. We see this consolidation on the sides, and then prices just shot all the way up and had an uptrend. And this was around the 15th of April when that was drawn. Not the 15th of April. It was around the 3rd of April. So 2nd to the 3rd of April. And so we traded this on the 14th, I'm sorry. So that was around 11 days, right? 2 weeks of trading. And so we do a predictive strategy like that. And based on this strong volume profile, we identified a strong level in the futures at 107.241. And so what happens in the price afterwards, right? What happened to the price? We scroll through back to this time, recent times. So prices came back down right at the pip. You see, right here, touched this level and then went up 20 pips. We had a 3% positive on our account. This was the reason why. Predicting levels before they even reach in the first place. Next one, Euro CAD. Euro CAD was an interesting trade. So over here we traded this on the 15th of April. We had a short opportunity right here. Now, where did this short opportunity come from? Well, it's this. You see this? Let me show you this crazy. So look on the top right here, 15th, right? This is where the trade happened. You see before that we had 5 days of sideways consolidation. And if you just draw the whole chart out, right, you're gonna see that the highest and greatest amount of volume is right at this level, right at this weekly point of control. And so we placed our level at the weekly point of control, which was around this level. And once price came back after around 1 day time, it touched this level, created a confirmation candle, and sold downwards. It was a simple trade, made profits on that as well, banked it perfect. Next one, we're going to US dollar, Canadian dollar at 39.373 US dollar, Canadian dollar. Okay, so this is where the craziness happened. So we identified 3 important levels, especially short levels in the market. The first level, you see this blue line, was here at this trend setup. Prices came down, consolidated momentarily before further sell-off. So this was a strong level, accompanied by a level on top of it right here at around 39.70. This level, we had this strong volume accumulation before aggressive sell-off. So these two were originally sell levels. As you can see right here, prices broke this level and broke the other level. We've never experienced anything like this before. It was just huge momentum. You see there was this huge momentum on the 15th of April from around 1.3897 all the way to 1.4115. So we're looking at let me see, we're looking at a 200 pip move in 1 day. 200 pip move in 1 day. So these two levels got broken. So what's gonna happen since these two levels got broken? Since they got broken, I've already changed them originally from red lines to green lines right now, where I'm gonna wait for price to come back, touch this level, and we're gonna get in with a buy order this time. So this is a really tough trades because we had to sustain 2 consecutive losses in order to, you know, while trading this thing. And just the most important thing is that the strategy involves us taking every single opportunity there is. And so sometimes when you get 2 consecutive losses, you just, you know, you feel quite discouraged. You know, you feel quite discouraged not knowing whether you should keep trading or not, but you just gotta keep pushing it. So let's look at the Australian US dollar. Right, the Australian US dollar. 1 second. I just love the market so much. I love this game. Okay. Right, we also took a loss right here. So there was one level originally. First level was that there's this trend set up. Price came up sideways, went further higher. We knew this was a strong buy level, but price just blew past this level. You see, it just blew past this level, and so we made a loss on the short, on the buying opportunity, and that was it. Now, because of this, right, we're gonna now have a green line right here. This was another trade, which I'm gonna. Oh my God, who moved my trade around? Do we have another opportunity? Oh, no, we don't. Okay, that's good. Alright, so we missed this trade. Prices came back down. And so because of that, we missed it. However, prices were at this level originally. Oh, no, sorry, excuse me. Originally, it was at this level, right? So we had this buy order, came in, failed. Prices went back down, hit our stop loss. We took a loss on the first trade, and so what did we do? Well, we say that because since this is a really strong buy level, the fact that aggressive sellers push the price downwards goes to show that the selling pressure is a lot higher than the buying pressure. So I expect that there will be even more sellers here compared to the original number of buyers. So when prices came back up, these sellers will be defending their positions really strongly and driving the price down again. So this is exactly what happened 2 days later. You can see price touched this level, right? 63.66, boom, 63.66, 63.44, 20 pip gain, right on the money. All right on the money. So it's a good trade, good recovering trade, and this is just the Australian US dollar, right? Let's look at the CAD. What happened to the CAD? Whew, look at the CAD. All right, so on the CAD, we had a really, let's go back to the previous price chart. We saw this really strong, you see this sell-off and a consolidation sideways right here. Prices then came down. We had this really strong level here at this level. We believe there will be a lot of sellers accumulating their positions, and it was 1, 2, 3, 4, 5, 6, 7 days, around 1 week ago, right? And 1 week later, prices, what did price do, huh? Price came back, touched this level, moved by a few pips, and then went all the way down, right? Scoring another profit, you know, a good profit, a good trade. Australian dollar, Japanese yen. This must be the longest review I've ever done. Australian dollar, Japanese yen. We had this really good volume accumulation level on the 10th of April. Drew this blue line right here for a buy order. And what happened? Prices touched this level and went up, right? From how many? From around around 67.75 all the way to 67.97. Right, it's more than 20 pip gain. Won this gain. Never look back on this trade. Very good trade. Very, very good trade. Australian dollar, Japanese yen. We did the CAD already. Euro dollar. Euro dollar. Let's get a euro dollar. Right, euro dollar right here. So again, we look at the top chart, the weekly chart on top. We see a strong volume accumulation before aggressive buying. Came back down, touched this level, went all the way back up. Strong, strong level. And what happened afterwards? Well, right here, strong. Right here, we took a reversal trade. It's a very smart reversal trade. So if we draw a volume accumulation right here, we see that on this section of the chart, there was tremendously strong volumes at the bottom part of the V-shaped candle pattern. And this goes to show that there's a strong reversal trend coming about. Just a lot of buying right here. So prices come back down, touch this level, went all the way back up, good profits again. So, you know, we have a lot of opportunities last week, and these opportunities really presented itself in very obvious ways that we could capitalize on. And the hardest thing really in trading is not so much about the strategy, but about your psychology behind making every single trade, because you just have to have the perseverance to keep going. You know, trading is a hard game. If it was easy, everyone would have done it, right? If it was easy, everyone would have done it. But the answer is that not everyone has done it, right? And you have to be the first one. If you want to be successful in this game, in this arena, 60% of this game is psychology, man. 60% is psychology. Strategy is just 10%. And so having the right psychology, the right mindset, the mindset of the abundance mindset of not letting any single winner or loser dictate your mood and emotions and deviate you from your original plan, that is the most important mindset you can develop. So looking at the Swiss franc right now, strong accumulation level, strong buying level at 96.64. Prices hit 96.64, bounced up, money back. US dollar, Japanese yen, strong volume accumulation, hit the price, hit this one, went all the way up, about to hit stop loss but didn't hit stop loss. Stop loss was right here at 89, crashed all the way down. Money. How can I keep going? Why do I have to keep going? You're just constantly making money, right? Euro CAD, did that. Australian Japanese yen, you also did that. Pretty much this is the whole recap, right? So if we look at all the trading opportunities we had, if we look at my statistics right now, excuse me, right? If we look at the statistics right now, the overview, I started off with $7,000. We took 59 trades in total. You know, 60% of them are shorts, 40% of them are long. We had an average risk to reward ratio of 2.77%. That's really, really good, with an average win of $153, average loss of $141. This is decreasing right now, by the way. You know, it's decreasing because we are capping our losses much more efficiently than in the past. And here's the overall account balance, 6.96% towards the upside while the market is crashing. This is crazy, right? Right, and if you guys have any questions, please let me know. Drop some ideas in the comments. I would love to hear from you. And this is the end of the trading review. I hope you guys have a good week ahead. Happy trading. Stay Stay safe, stay strong. Peace out.